Say microphone check 1 2 1 2. I said microphone check 1 2 1 2. I said microphone check 1 2 1 2. And guess what, my people? Pope loves you. What's up, beautiful people? It's Pope with Stop Dot the Trading, and we're just gonna let this work. I am fairly certain we're gonna have audio for the CPI print, which is in 8 minutes, actually less, 7 minutes. So I am going to double check, make sure stream is rocking and rolling. And we're going to switch right on over to the browser. We're waiting for this data to print in right here. And I just want to make sure the stream is working. So let me do that really quick. And I want to be able to pull up the comments if I have enough time before this happens. Video. We got the live stream. All right. It looks like we're live in 5. Because there's no buffer talk game with live in 5. Stock Doctor's here to rock you with our buys. Just double checking. Let's see if we can get this one watching right now, which would be me. All right. So I got the chat. Can I pop that chat? Yeah. Chat loads up here. All right. Well, I'm going to save that URL. Ain't that beautiful? All right, so that's good. All right. Well, I guess I'm actually live at streaming right now. This is amazing. I spent basically a week and a half trying to work out all the kinks to get this live. So everybody just bear with me if you're popping in. Not worried about much, except really interested in this CPI print in general. So what am I thinking are going to happen? I think we're going to have a pullback in the headline, and we're going to see core inflation being really sticky. That's pretty much the summary of what everybody in the market's thinking is going to happen. It's not necessarily what the market is pricing in, say, but that's what everyone's expecting to go down. And I apologize. I'll start creating interesting content here in a minute, and we'll start rapping about everything. Let's flip over to the charts real quick, see how that stream works. And all right, we're good there. Market's already seeing a little bit of volatility leading into that. SPY's there. Okay, let's get over and start lining up what we're going to be looking at for stocks today. Let's get that out of there. SPY. Let's bring this in on the one. Actually, we'll bring this in, really zoom in on the 15-second chart, because we're going to want to see what's going down on everything. So on the top 3 charts, we're going to have SPY, NASDAQ, and the Dow. And down here, we're going to have some of our big boys. Let's see how they're handling this news. Let's see. So everything's ticking along right now. We're right in that middle range on SPY and the NASDAQ. The one thing, I think the market looks pretty bullish in general. I don't think the market is going to really react too badly to this news unless it's really bad. I still see us in kind of a bullish range. When we zoom out on the SPY here on the top left, let's bring this back to the 4-hour chart. You can see we're right in a range that's been a significant area of support and resistance, and they've pretty much dropped us right in the middle of it. So if the market makers want to sweep out options based on this activity, if it's super bullish or super bearish, they're pretty much set into a stream between two liquidity profiles where they can just go either way on this market. So algorithms can run our day today, and we're probably going to see a lot of that. The news is, it's a hype thing. We already know inflation's really bad. And whether or not energy prices or food prices are coming down as headline inflation, it still doesn't stick to the narrative that the Fed has, which is that their core mandate really is a function of affecting demand, and demand is more affected within the core numbers. So, all right, let's go. Oh boy, I'm thinking about this release for a little while now. I'm nervous. Not really nervous. I mean, it's silly to be nervous about something like this. So what's going to happen? It's going to go up, down, or sideways. I'll tell you what. There's your spoiler alert. And hopefully that's pretty readable. Let's view back over to the news section here. All right. Because there's no buffer tougher, and we're live in 5. Stock Doctor's here to rock you with our sales and buys. Microphone check. All right, we're good. We're good. It's coming up now. It's going to be released any minute now. Any minute now. All right, we're good there. Okay. One of my previous jobs, I was a web developer for 16 years, so I'm sensitive to how the BLS.gov website must take the 1 minute right before the CPI loads. I mean, the web developers must be sweating because it's like almost the same thing as a DDoS attack. Everyone's just trying to like refresh to get this data. They must get hit with serious traffic. I wish I knew what their numbers were on days like this. Oh boy, it's right here, right now. Where is it? Where is it? Oh, somebody out there knows what it is right now. Okay, hasn't printed yet. What our expectations are right now, market wire 8.7 with a 0.2 on headline and a 0.56 on core. All right, so it should be here. Should be here. One of these refreshes right now. Let's see what it is. Yeah, it's got to be here right now. This is the refresh of all the refreshes. Nope. All right. Fun. Everybody waiting here with bated breath for a bunch of chats and numbers to come out. It's really, it's no hotter place to be than right here watching. Let's see what this consumer price index really has for us. Here we go. All items unchanged. 8.5. 0.3. All items less food and energy included 0.3, up 0.59. Rose 8.5. So it's pretty much in line. It's a miss on headline. It's a miss on core, but it's a positive on the. All right, so year over year, it's positive on headline inflation. Month over month, negative, based on expectations, as well as core being sticky. Okay, let's go. All right, now right away, let's take a look. Ooh, they like it. Ooh, they like it big time. All right, so we just went from 412.50 on the SPY all the way up to 418. Oh, we're gonna say hello to 420 someday in this range here. Wow, look at that spike. So they're digging it because inflation's headline number came in lower. Month over month was higher than expected. But we need to review some of these data points. But we just want to watch this market here. Let's see some of this action first. Down below, we have from left to right, Apple, Amazon, Microsoft, all firing off. They're the main drivers of the top big boys. We want to see how, okay, so SPY's at 1.72% up. NASDAQ, much more. So that's having a much higher. That means it's going to be a lot more volatile to the downswing. Okay, and Dow Jones is a little bit less than the SPY right now. Those are pretty much in line with where you would expect those in terms of their reaction. We're 3 minutes past that data point and we're still climbing. So what we're going to do right now is try to find our ranges for the day. Because after such a big gap up in something like this, we're most likely going to have a gap down as well. This is a really hot opportunity to trade. But what we need to do is we need to go over this data. That's my job. And I need to see what this is all about. And what I'm analyzing right here is that we know energy and food prices have come down. All right, so is this the right one? This is June. No, it's not what we want. Got that really right there. Maybe they don't have it updated in PDF format yet, so we'll see what it is on the HTML. That's for July. Rising 0.13% in June. All item index increased 8.5% before seasonal adjustment. The gasoline index fell 7.7% in July and offset increases in the food and shelter indexes, resulting in all items index being unchanged over the month. Let's blow this up so you guys can see it a little better. The energy index fell 4.6% over the month, and the indexes for gasoline and natural gas declined, but the index for electricity increased. The food index continued to rise, increasing 1.1% over the month as food and home index rose 1.3%. Okay, so that's interesting. So food actually was up. The index for all items less food and energy rose 0.13% in July, a smaller increase than in April, May, and June, which was 1.3%. I believe last month, so it's a lot. Yeah, the indexes for shelter, medical care, motor vehicle insurance, household furnishings and operations, new vehicles, and recreation were among those that increased over the month. There were some indexes that declined in June, including airline fares, used cars and trucks, communication, and apparel. Okay, so used cars and trucks is really interesting. That declining, that was a big part of core that we were looking at. So now what we really want to look at as part of core CPI is rent. All right, I think that's going to be the big. So I'm going to jump down to, we've got shelter coming in on the July print right here at 0.5. So that's pretty steady Eddie. Used cars down, apparel came down, utility piped gas, so it is natty gas. Fuel oil came down 11%, gasoline down 7.7%, energy commodity 7.6%, so energy as a whole negative 4.6% down. All right, food away from home is down 0.7 as compared to 0.1, or excuse me, 0.3 at the household. Okay, energy, less food. All right. It's not giving us that good of a breakdown of rent. All right, so I think we're going to have to wait for the full PDF. Let's just double check there's nowhere on this. Rent index rose 0.7% in July, and the owner's equivalent rent index was 0.6. The index for lodging away from home continued to decline, falling 2.7% in July after a 2.8% decrease in June. The medical care index rose 0.4% in July after rising 0.7% in June as major medical care components index continued to increase. The index for hospital services increased 7 point. Okay, so that's what. All right, so we understand that rent, it was pretty flat in terms of changes. So the core is there, it's sticky, but it's not bad news. It's not that bad of news at all, really. And this is talking economically. Obviously, the market is loving it right now. Had a big fire up, and actually it's consolidating right now. SPY at 417. We'll jump over to the charts in a little bit. Before we do that, I want to also just take a look here and just check general services. Oh, okay, so services pulled back pretty. Okay, so these are the core reasons why we're having a fairly relatively easy print here on the inflation data. I mean, it's funny, it's 8.5%. It's a horrible amount of inflation, but the market doesn't care because we've diverged from what is economically occurring versus what the market wants to have occur. So the market just wants some good news, baby, and they just got there. So wow, we have to go over to the charts now. Look at this huge fire up. I mean, talk about a setup, people. Talk about a setup. Oh, you better get your day trading hats on, people. This looks glorious, glorious. We have 50 minutes till market. Yeah, we have 50 minutes till market open right now. And we've got some juicy levels playing themselves out. I mean, when was the last time we were at 418.50 on a SPY? Right here, May 5th. So all the way into June. So from May 5th, we tanked down, had a bear market rally. Then last CPI data at the 9.1%, that stuff came down. We gapped down. Now we're going to gap up to what we were before the two bad May CPI print, the two bad May CPI prints that we just had, which was May and June. And like, well, boy, this is going to really lead us in. So, okay, so what we have right now is one more CPI print in September before we get to any real information about what the Fed's going to do. So I say swing trade for the fences right now, people. Like, all right, so we're in this range. We just broke out of that support range that we were talking about with this. We're most likely set for a pullback towards the 417. I'm going to try to get a couple more points of confirmation. Now, there's not a ton of data that we're going to want to use from this more recent. So let's try to get some levels on the SPY from the last time it was here. Okay. Okay, so we ranged out. We were tapping a serious resistance point, which was at that 428. And our support down here became at 410. There are some decent, let's see, what does 418 really look like? I mean, it really looks like a resistance based on what it was towards the end of April. Yeah, so we're tapping on a resistance point right here that's pretty strong at this. I'm going to say it's pretty much right where it's at right now. I'm saying 418.83. We're going to draw that in. We're going to draw that one in right there. That is, let me get that right there. Come on, let me get it. Let me grab that 418.83. That's another level for us to check out. Now, do we have anything else? I mean, you might call this. I mean, 420 is going to be a psychological level no matter what. It's just funny that way. And here we are. Let's stop drawing. Got that. No. Delete that. Thank you. We don't want to keep drawing. Thank you. Good to go. And draw. Boom. Delete. All right. All right. So that's the 3-minute chart. Let's bring it into. We really want more data here, don't we? Because we have so much volatility. Even though it's pre-market, I still want to be able to break down the volume spikes a little bit better. That's one of the reasons I like the zoom-in charts. You really shouldn't trade on anything like a lower interval, but it's a really great way to get some information about how the volume is splitting out. Some people like to look at the order books, the level 2s. I think that'll make you schizophrenic if you stare at those things too long. So I tend to like to look at it through the charts. I like to find volume levels through the charts rather than through the order books. I think that'll just make you a crazy person as a trader. Ooh, meta up. Look at that. 3.5% right now. Let's keep those the same. We'll keep the indexes on the top and we'll play with the bottoms here. In terms of individual stock movement. Let's go over to some of our screeners right now. It's funny because, you know, we wait so long to get that CPI data. We get it and we're like, all right, now, what do we trade? How's it trade? Like, a bunch of degenerate gamblers, those institutional investors, not us. Those institutional investors that are looking to sweep out the entire derivatives market on us right now. Trade Desk is getting a bounce. See, Trade Desk had bad earnings report, and it spiked up like crazy. Right now, it's 20% up in pre-market. TTD is the ticker on that. And that's one of our top 5. So in terms of top gainers in the pre-market right now, we have CLWT. I don't know anything about this, but it's a Eurotech holdings company. These holdings companies have been blowing up lately. The reason why they blow up is because they're highly owned by the institutions or the owners of the company, right? So if you have, 5 shares and 4 of them are owned by the company, and they won't sell them at a certain price, or they sell them to each other at higher prices than what they agree, then the price can be anything. It's really not a real price, because if you try to dive into one of those markets and either trade it or, let's say, short it, or if there are even any shortable shares, you're not going to be able to transact on it. And you probably end up, if it was transactable, you probably end up in yourself in a halt. And is exactly what they want to do, because they're just basically price gouging in order to like get a big payday off their IPO. Trade Desk's the only one I'm really seeing that's that significant. Let's see what we've got. These top movers, let's see what their market caps are. So yeah, like Trade Desk's 2.65 billion market cap. I didn't realize the Trade Desk was that big. That's the only one we have that is really that significant. Jumia, I could learn more about that company. It sounds familiar. And Recursion Pharmaceuticals is having a nice little spike. BBY, squeeze play. By the way, we should take a look and see. Oh, absolutely. All right, before we move on and take a look at some of our squeeze play in action, let's make sure we take a look at some of the top losers right now. Nothing too big. The biggest loser I'm seeing right now is down 30% and 25, 23, 25, 20, that type of thing. So nothing that's, too irregular. And bioscience always seems to be at an all-time high or an all-time low. Oh, we're seeing a big pullback on Redbox. Okay, so price change, pre-market low. Ooh, 2.6. Okay, so keep an eye on that. Last time it got down to this range, it had a big squeeze up. And that could be coming later in the week or next week. And now I'm going just to check. All right, so in terms of market caps on some of these losers, we've got Rackspace. Rackspace is a web hosting platform. I know them. I used to work with Rackspace. Repay Holdings, I don't know too well. They're down 19.69% in pre-market. And then Sweet Green. Oh, boy. Let's see if they spiked on 420. I don't know what that business does. All right, so 1.85 billion on Sweet Green. Let's just take a look and see who they are. All right, so you come over here on Webull and you got these tabs at the top, and you can easily just get over to a company's profile really quick. Sweet Green is a restaurant company, along with its subsidiaries, develops and operates fast casual restaurants serving healthy foods prepared by locally sourced, seasonal, and organic ingredients. That's Sweet Greens, man. I like that. All right, 150 restaurants in 13 states. All right, and they're down significantly. So Roblox, Cano, I'm taking a look at their news right now to see what's going on. They're being talked about for losing and sliding, but Cohen says the bull case is still strong. Morgan Stanley cuts its price target on Sweet Green from 23 to 25, noting sales deceleration and overweight ratings kept. Okay, lowering outlook. All right, so yesterday they lowered their earnings outlook and had to cut some jobs. The market, I don't think, always really understands the job cutting thing. That's actually very bullish for a company in terms of fundamentals for them making their balance sheets is to cut off jobs when they need to. But all right, let's take a look at some of our squeezability buddies. That's not correct. Ooh-wee! 5% up right now for AMC in the pre-market. Let's see. GME 2.53. And then we see that our old dusty buddy over here, BBBY. BBBY, 11.5% up in pre-market. I mean, I don't know why the apes never trade this baby. It makes money on squeezes. I know I don't want to trade it. And we don't need to get into that debate today. After all, it's actually just nice to see some heavy activity. We want to zoom out here a little bit. and just kind of see the overall breaks. I mean, we see, it looks to me like at the 39 level. So our squeezability buddies were intending on going down today until the CPI print was so pretty, so pretty. 8.5% inflation, thank you, Lord. I know anybody who thinks we're going to be doing any U-turning, no, sir. Do not listen to anybody who's talking about the Fed doing a U-turn. And all leading up to this week, all you would hear is this pricing in of the Fed doing rate hikes in 2023 and essentially doing a U-turn from their current stance. Obviously not. Obviously, they weren't pricing that in because that would be great news. This inflation print right here is average news, and the market just fired up like a serious percentage, and we're holding that right now. So we have got to see how the volatility kicks in once the options market starts influencing this price. We're seeing like volume. I want to compare this volume to yesterday in terms of the volume that just kicked into us at. Very insignificant amount of volume. So we're going to see our main action come up here in just about 38 minutes. Thank you. Till the bell rings. Ding, ding, ding. And we are rocking and rolling. So the link I was looking at, I'm not sure when that comment came in, but if you would like, I'll put it here in the stream chat. I'm going to get that. We're actually going to bring on back to the CPI data and see if we can get that PDF printed up here. Hopefully that'll be ready for us on the docket because this is going to have a little bit more specific information for us. Let's make sure we're off the charts, back to the browser. Here we go. All right, that is still for June. All right, so the PDF is still not ready. You can see what I want to get into is the specifics of the shelter and the core, and I really kind of want to like go regionally and break some of that regional information down and get into the nitty gritty. I really want to understand. I think we understand what's going on with headline inflation. We saw that food went up 1.1%. It's not really as high as we might have expected, and that energy prices came down. The thing about the energy prices is that we flooded the market with our reserves. It takes 2 to 3 months to convert a lot of our reserves into gas, which would, when we released that in March, so now we're into June, and then all of a sudden into June, then to July, we start seeing gas prices go down. It's no surprise, but our entire reserves are used up now, so, I mean, I guess it was nice. We had a little summer, go take a summer drive if we want, but I mean, we're heading back. We're heading back into the winter and higher gas prices. Natty gas is going up. We're gonna be going up again. I want to take a look at natural gas right now, actually, because that has been a significantly fun play. What I do with this ETF in the morning is I will get up. I'll get up first in the morning. I'm saying 2 a.m. my time in Costa Rica, so 4 a.m. when the markets first open up. And you can see how much volatility you can get just in the pre-market. So oil today, for example, is relatively flat after being up 5.36% yesterday. It's currently relatively flat, but you can see this huge fluctuation it had because the futures markets are different in your different time zones. And as one starts to close off, the price starts to head in and out, and you can really jump on some nice volatility. That's a $74 all the way up to $79 swing on that. Now, my buys on natty gas is probably going to be in the 60s. And once we get there, and we will get there, we're going to be talking about how nice an opportunity we might have getting into the winter months on the natty gas play. It's August right now. Let's say by the end of August into September, we're going to be looking at that. All right, so I'm really interested to see today being the 10th of August, and we're getting really close to the ex-dividend dates for the AMC preferred equity offering, which is the 15th. You have to be invested by the 15th, and that means with your shares settled. So with this big spike up due to the good CPI print, we're seeing AMC have a little run. And it really could go higher. We're gonna see how today goes, because I really believe that today is going to be all about the algorithms. I think they wait for days like this, big news events days, because they can really rock it and roll it. And we were sitting right in between two huge resistance and support areas, and we just zoomed out of that pocket. Imagine all the puts. Like, actually, let's take a look at the SPY's option chain as we go right now. Now, I don't prefer to play or look at options in Webull. I actually prefer old-fashioned Fidelity for that. But we're going to see this chain just get obliterated today. All right. So we're at the 411s. Anyone who had calls is going to call home to mama. Mama, you don't have to work no more. Buying you a Lexus. Wow, I want to trade this a little bit. I really do. This seems to be coming into quite a little level here. So what I like to do and want to do with you guys is I want to do a little paper trading. Because why the heck not? We're going to be here hanging out all day. So I've got my Webull paper trading account up here. So we're going to get a little more zoomed in. That was the 3-minute chart we were on right there. That's the 1-minute chart. And now, so that was an extremely bullish move and a big gap up. And we're consolidating right now. But the thing about consolidation in pre-market is there's not a lot of volume to call it consolidation. So the real price hits us in about 30 minutes. All right. So I'm going to wait for my pocket aces on a day like today. I'm not going to get too crazy or too hyperactive with that. Let's make sure. Sorry, we're still on the browser section. I was looking at charts here. I got to remember that. I got to make sure. I got to be DJ for this live stream as well. I've got my setup like it's like, hey, what's up, people? Microphone check, microphone check. And then all of a sudden it's like, hey, check out this thing, the fear and greed index right here. Isn't that dope? And they're like, oh, look at this price action. There's seriously something happening. That's what my setup is right now. Hopefully it's working out well. Hopefully my mic is still micing. Microphone check. All right, let's take a look. I want to stay diligent on the actual CPI information. I really want to review all of that with you guys. There's one other. We don't need that. So trading. All right, so we're going to bring up economics.com. I'm not necessarily sure how perfectly accurate their data is. It looks pretty good from everything. I mean, they're already updated here in terms of the inflation trend. So you can see what we have year over year. And we had May 8.6, June was 9.1, our big print. And we're back down to our March levels, which, that is interesting, but still very high. So we had 8.5, then pulled back to 8.3, 8.6. June hit us, bang, bang. By June's CPI print, we were able to get some gas back into the markets. That brought us down just 60 basis points down. Now, what I want you to know that's tricky about these calculations, let's look at this, for example, on a 2-year. How easy is your 2-year here? So yeah, let's just bang that. Yeah. Like this website, it's pretty good. All right, so what you'll see here in July of 2021, right, we had a flat print for the summer. Now, this was a big aspect of how it's calculated. Because it's calculated year over year, one of the big reasons that our March print was so strong, one of the big reasons why our April print was so strong was because our jump from March to April of the year over. Oh, excuse me, I'm getting it backwards. All right. So one of the big reasons why our March print this year, 2022, was so strong is because in March of 2021 we had doubled inflation, nearly, and then in April we doubled it again. This actually is the reason why the April print was down, because it's calculating year over year, and that year over year change from March to April was so high that it had a significant effect on what pulled back the calculation to make it look like inflation wasn't so bad. All right. Then the same thing happened with May, but not so much. So you started to see the inflation rate come up. Now, what we knew is that after May, we're going to have June, July, and August, where in 2021, they were flat prints, 5.4, 5.4, and 5.3. And then in September was also 5.4. So the year-over-year calculations right now for July, August, and September, including June, we already got, in July we just got, the year-over-year calculation isn't getting any kind of boost from the inflation that was happening last year. That was kind of something that was trimming down the numbers in April and May to make it not look so bad, which is one of the reasons why June kind of surprised everybody so much, because the year-over-year change was less significant in 2021 than it was in the Marches and the Aprils, like I just said. What we're going to see now is that this will probably stay flat for August as well. I don't see, and we're going to keep an eye on energy prices. We're going to keep an eye on gas, oil, natty gas. We're going to keep an eye on commodities, and that's really the main core drivers that we're going to be watching. Now, tomorrow we're going to get the PCI reading, the Producers Price Index, the PPI, excuse me, and I would expect something similar. If we see a hot read on that, that's really bad news, but it's not necessarily going to hold this market back. And let's bounce right back to the market, speaking of such. All right, still not too much action. Everybody is waiting for the market to open. How is our live stream going? Anybody commenting over there? Everyone knew it was going to be low. 11K. Going to be 10% would scare everyone. Yeah, it would. You're right. Yeah, we knew it was going to be low. What we're really looking for is how sticky core is going to be. Because if core inflation is sticky, we're dealing with the wage price spiral, right? And this was okay earlier in the year because at that time, companies still had pricing power, which is the ability to raise prices without people stopping buying things. And they're losing that right now. And the jobs reports are hot. They need to get employees in the door, and they're going to need to pay these employees more, which means they have to charge higher prices, which is part of demand destruction for them. But it also can be business destruction at the same time. So it's really unfortunate how this entire system works, right? We sit there and we basically hyperinflate the banks and our currency. The banks make a bunch of loans and they end up with the collateral for the assets for everything. And then we have to pull back on that hyperinflation, and what happens? The taxpayer has to lose their job. And we have to go into a recession. why don't the banks just have to give back all that money that they were given for free? You know, like like why is it always on the backs of us? You know, and it's because the system dictates as such, and we're here to learn why it dictates that way and how to make money off of it. So everybody, you're welcome to, ask me anything in the comments. I'm doing my best to manage all the different aspects of the live stream. It's really one of my first time live streaming in studio. They don't have it. I don't know what that means. But, speaking of which, I'm actually going to bounce on back real quick because not too much going on in the market right now, and I just want to see if we can get that PDF. I've got it all. Just need to be able to. Still June. Still June. Come on, people, you gotta get on your PDF department. It's unfortunate. It's just not all the data I really want to see in this report alone. The entire news release. Isn't that exactly what this is? Did say something about the PDF right down there. That's same. Ooh, here we go. They got the full on HTML too. All right, very dope. All right, so first things first, I wanted to look at services. It's a 0.4% month over month. Lodging away from home, so people aren't traveling as much, not taking as many road trips for work. Owner's equivalent rent of residences. It's not a big change. Domestic services. Household operations, domestic services didn't print? Well, that is a big number. I mean, domestic services is an important aspect of the services industry, at least in terms of this calculation. So professional services had a zero. It was flat. Look at that. Dental services pulled back. Eyeglass, eye care. Other medical professionals pulled back. Medical care services as a whole is up 0.4. All right, transportation services. There we go. Rental, car and truck rental service down 0.9. Wow. Big pullback in number of people renting cars. Wow. That is a big number. I mean, that's a huge number. Look, we're looking at basis point changes in most of these. And then all of a sudden when we get that helped out a lot. So car and truck rental. So we have to ask ourselves, are things pulling back that are a good kind of pullback? Because at least cars and trucks and car and truck rental really has to do with the amount of business that people are doing. The amount of either moving houses, which when rent is high, and housing being the way it is, and things are stagnating, inventories building up on housings, people aren't moving as much, not renting as many U-Haul trucks. They're usually when you go out of town on business, you're going to rent a car. There's less of that business being done. I mean, this is the summer months. You'd expect car and truck, right? So this is really, really brought I'm sure that had a big effect. So airline fares are down big. It was down 7.8%. Public transportation down 6.1%. Parking, parking and other fees and tolls. That just means people are driving less. Because trust me, they're charging. Recreational services. Okay, that's not actually down as much as you'd think. That's actually up there. 0.4%, and video and audio services. Oh, sure. Oh, good. Want to make sure I wasn't on the charts layout reading all this to you while I'm live streaming the wrong section. All right, video discs, other media. These aren't that, the weighting isn't very significant. Like for recreational services, their weighting is 3.09, which is actually a lot more than they're giving for public transportation. But just car and truck rental is 0.156 in terms of weighting, but transportation services as a whole's weight in terms of importance on the overall CPI data, that's what these numbers right here in this column are. Transportation is 5.9% of the importance, as opposed to recreational services, 3. Yeah, that's the weight of importance within the index. Pet services are up. Photographers down 0.7. Admission, I'm looking for some big numbers. Admission to sporting events is up 4.9%. I don't think that's... Well, they don't even have a weighting for that, but they're saying admissions is actually weighted more than car and truck rentals. That's interesting. Okay, so education and communication services down, and this is a pretty high 5.2% weighting on that, and that's down 10 basis points down. So that's a good pullback of 30 basis points in the right direction for inflation on education and communication services. Let's see, the big pullback there was daycare and preschool. Summertime. No wonder it makes sense. We're in the summertime. So naturally that would pull back. June, not so much. Actually, let's double check. The June numbers are right here. So the June was actually an increase across the board on those, and then it was pulled back for July. So that makes sense. And then transportation services for buses and kids going to school, going back. Makes sense. All right. Financial services. What was financial services there? Up. Okay, so we have been seeing a pullback in that. People are getting back into their bank accounts. All right, that's interesting. Services less rent of shelter and services less medical care, and big pullback in services. Okay, so we're seeing kind of that basically rents are really flat and services pulled back a lot. Can you go into the data for tomorrow to highlight if the data should get a boost from last year's data or if it's flat as well? Yeah, absolutely. We can check that out. So that's going to be over here in our PCE, PPI, month over month. Producer price inflation, month over month data. Here you go. Let's bring this up. Compare over the 2 year. Thank you for the question. Happy to oblige. All right, so we've got June's data right here, which is really hot. Then we have April, May, June's data. So, okay, so the question I think you were asking is, was there a big significant change between June and July in the PPI? That's a great question. Not really. There was this, it's from 0.8 to 0.9, and then from July to August, it was flat at 0.9 to 0.9. We saw a big pullback in September. I believe that's September, right? So June, July, and we're looking at September right there. There's a big pullback. So we might see that as a significant boost coming up on next month's print. So we'll have CPI, then followed by PPI a day or two after. I believe that's going to be on the 12th or the 13th is going to be the CPI print for September. And the CPI print's not going to be aided by this year-over-year calculation aspect, but it looks like the PPI could be. And it looks like it could be heavily favored to be a positive print just based on that year-over-year calculation. So thank you for asking me to check that out. It's a great question. Any other questions out there? Who's from last year's data as a flat man? That's a great question. I'm glad you asked that. All right, so I'm going to get back into the CPI data. I'm just pulling apart these numbers and we're seeing a big pullback in non-durables. That's stuff that goes bad. Durables is food that doesn't go bad so much. Non-durables, stuff that doesn't last on the shelves. IT, we've got a pullback. Recreation, video, and audio. We've seen these numbers. I'm really curious to do a little bit of a regional breakdown. I haven't seen anybody do that, and I haven't really done it myself. So a lot of this is going to sort of be news to me as well. I don't go into this. So they break down the CPI by regions, and then within the regions you have 4 or 5 examples of the region within the region. And I want to look for outliers, like big numbers. And, the first piece of data that we get is, okay, where is it the worst? Midwest and the South. So East, North, Central, Midwest. I'm going to say East, North, Central, Midwest. It's got to be that Dakotas, maybe over to Michigan, but like Minnesota. I'd like to, let's see what this, how is it in Boston? They ain't even printing in Boston right now. They ain't even telling you. You don't want to know. Ice is bad in Boston. Any of my Boston cats out there? How's rent in Boston these days? Let me know. I'm practicing for when I will have a stream full of lots of people. So we see inflation prints hard. For June. Percent change year over year. Okay, so percent change from July, from June and May. Flat change is where they're getting that data on the flat change from June to July at 8.5 as compared to the year prior. What I think is kind of interesting about this regional data, it's not given, but the coasts are where the most of our cities are. And always when we're talking about CPI and core, less food and energy, it's still all an urban calculation, right? Like that's what the CPI-U is. U stands for urban. And we all know it's going to be more expensive in a rural town to get anything, services, food, energy. And so when they eliminate the rural areas, a lot of times that's including suburban areas as well, where the majority of us live. And that's why basically everything we're dealing with these numbers is just, it's not how any of us would actually calculate any of this stuff if you had a halfway working brain and you wanted to actually have the data and not manipulate the data. This isn't how you would calculate it, and then you wouldn't decide, oh, food and energy and shelter and services such as medical services are something the Fed can't really handle. So we'll call those headline inflation. Headline meaning the ones that you guys care about. But the ones that we care about are the ones that we can affect, which are the ones that are not so volatile and not affected by commodity prices. Speaking of commodities, all right, so I think we've picked apart, the breakdowns of this. I didn't really get too much into the nitty gritty on food. So why don't I do that really quick before we bounce back over to the charts? We got 8 minutes left until market open. Citrus fruits down. Beverage coffee up 3.5. Big jump in coffee. Ruh-roh, George. Oh man, there's other fats. Other fats and oils, including peanut butter, is up. Get it while it's hot. Griddly and good. Energy commodities down, so it's a huge weighting, 9.2% weighted in energy. How can you have it weighted in energy, but then say, oh yeah, by the way, energy is like not that important because we can't do anything about it? I just made fun of coffee drinkers. I don't drink coffee. Then I had to take a little swig of Coke for the juice. I was up really early this morning. Getting ready for this, making sure I could live stream. Audio did not want to work. I was microphone check into dead air, and I was like, oh, don't do this to me on my CPI day. On my big CPI day. It was like the grand ball of the live stream coming at you. Fuel and oil down 11%. Yeah, that's big. That's a big part of economic warfare right there, and us flooding the market with our own blood oil. Just kidding. Relax about the politics. All right, cool. Now, one of the negative things I saw this morning, I mostly saw positive indicators, but I saw a negative indicator in cryptocurrency having a little bit of a pullback here. And I wasn't sure I was going to weigh down on the cues at all. And so far, not at all. We might be seeing a spike in cryptocurrencies right now just because of all of this factor anyway. Let's take a look. Oh yeah. Big old spike up. Look at that. Big Daddy Boom Boom candles on Bitcoin and Ethereum. All right, let's check out the Twitters. What's got to say about this thing? Ooh. They must be so proud of that little dip down from 9.1 to 8.5. We're amazing. The economies have never been in a recession. Don't call it a recession. It's been here for years. Wow, that is incredible. All right, so what you guys saying? Peter Schiff. Paradoxically, investors are selling dollars and buying gold on a lower than expected rise in July CPI, as they think the Fed will adopt a less aggressive policy. They're right to sell dollars and buy gold, but for the wrong reasons. The decline in inflation is only temporary. That's true. Peter Schiff, I disagree with him on what he thinks we should do. Thanks, Unusual Whales, for your wonderful breaking news. But what he thinks you should do with the data is, I never agree with him. Yeah, I like unusual whales. Do you guys follow them? I don't know who they are as people. Ah, look at this. This is great. Rate hike odds tumble. All right, so the 75 basis points is off the table again. Now we're going back to 50 because of this quote-unquote pullback, and we'll see about that. If you want to buy the euro because of today's US CPI, don't do it. Today's data are the first sign that the global inflation scare is easing. That'll hit way more in the eurozone than the US since the former is going into recession. Unlike the US, the euro is going below parity. Dude, we're in a recession in the US too. The reason why they say that we're not in a recession is because they're saying that we're not in typical recessionary situation because there are jobs. That's it. It's just there's a lot of jobs that people can take on. But what they're not realizing is that there's a household survey and your headline survey for jobs. And right now, as of April, till now, that number is diverged by 1.8 million jobs. And that's because the new jobs that are being created are being taken on their part-time jobs, their secondary jobs, and these are people that are already working and are taking on a second or third and sometimes fourth job. So they use the number that's just jobs. But they're not using the number as like how many more people are working, which is like basically the participation rate, which is going down. So jump. I mean, they look at it like it's like a robot that doesn't really understand how this whole thing works. All right. So the fact that CPI is being forecasted at 8.7 in the first place after consecutive months above 8 should have markets tumbling. The idea that if we come in at 8.5, everything is fine is just stupid. I hear you, brother. I hear you on that 100%. That's why the divergence between the market entering a trade before the CPI report hits. That's about right. Oh, boy, those charts don't look good. Over to the charts. It's time. All right. Market is going to be open in 1 minute. Let's just see what's going to happen. I can't wait. This is my favorite part of the day. My dog's looking at me like, who the hell are you talking to? All right, people, bear with me one moment. Let me just check comments, make sure nobody needs it. I gotta let my dog out. I'll be right back. 30 seconds. All right, beautiful humans. And here we go. I don't know why I'm rocking these right now. I don't necessarily need them. All right, let's zoom in on this. We've got 1 minute charts up right now. Let's get in 5 seconds. 5-second charts. We've got on the top, SPY to the left, NASDAQ in the middle. Let's get, I got GME on the right. GME at 350 looking pretty, but it's going to bring up Dow. Boring old Dow. AMC running. We can expect AMC's action to be similar to GME's. Look at that pump up. A nice little boom boom candle. I mean, for a 5-second chart, that's a boom boom candle. I am surprised by the flatness right now on the SPY, leveling right out at about 1.75% up at the 418.60 level, right around 418.50. Ooh, some people are really trying to decide what to do with this market. Now we're seeing a little bit of that volatility towards a pullback. Sitting right at VWAP right now, which is something that's recalculated each day. So it's not a lot of data in the VWAP right now. AMC pulling back from its initial run this morning. And here we go for a gap fill. All right, so we're going to zoom out because if the closer you're zoomed in, the more crazy you can get with price action. You don't want to do that. So we want to really understand our levels. And to understand our levels, we got to know where they were before. So 417 and 68 bips is a big level for us today. Not necessarily in the grand scheme of the SPY, but just in terms of our level. So we're going to want to be looking for that to maintain as support. So we're coming at it right now. We're coming into, let's see, let me double check that one. 417.68, we're at 418. Yep, so 417. So we're 50 basis points away from coming in and tapping what may be our support line for the day. So I'm going to draw that one in for us. This is a temporary support. There's not a lot of significance other than today's price action that gives us this range. So we're not going to keep that very long. But here we are. You can see we're coming in on it. So far, so good in terms of holding it. It did act as a support. It did act as a support there for that period of time. We had our first touch on it. And I'm going to draw it in on this chart too. Yeah, look at that. We touched almost right on it. Okay, all right, so that's good. Oh, I can't draw on this chart. Can't draw on the small charts. They're like, come on, grow up. You're trying to chart out a 15-second chart. Come on, grow up. Big boom boom candle on Amazon right now. All right, so that's going to leave us with a nice little spike up. So we're getting back over to our VWAP and our 215-second moving average. Doesn't really, it's not a big deal. It's not a huge line. Okay, we found a semi-support that was somewhere in the range of something that we were trading during pre-market when volume was down, but volume was a little bit heavy in the early days of pre-market in comparison to other pre-market days, but still low. So here we go, looking to touch it, 417. It's actually a little bit higher than that 63 that I had, or 68 that I had. It's actually right around 417.70 as our support right now, and it's testing it. It's testing it on its direction in order to fill the gap that we made from the CPI print being a little bit better than the worst news that we've had in 40 years. So economically speaking, this market should pull back. The market speaking is the institutions will determine what they're going to do with their money. If they want to make a bunch of money in the derivatives market by doing the opposite of what everyone expects it to do, then they'll go right ahead and do that. They'll pump this market up. But we seem to be at a pretty high level. If we were going to pump up much more than this, we could tap 420 But I think we'll find major resistance at 420. I don't think that's when you're going to find all the apes come running in to buy. All right, so we're hitting that resistance mark right now. We're on that resistance, 417. We're right there. Does it break through this mark? This is a big aspect of the day. Let's watch. Not a lot of conviction. Let's look at volume. I'm gonna zoom in on SPY so we can all look at this a little bit more closely. Make sure my fat head is out of the way. Microphone check, mama, microphone check. If the live stream drops some frames, just because we're in Costa Rica, baby. Ooh, we're right there, we're right there, we're right there. It wants to break it. It wants to fill the gap. It wants to fill the gap down. How's the volume? This is where you're really going to want, because the volume is the most current moment indicator of all indicators. A lot of indicators are lagging indicators. The most current indicator you really have is volume. And what we're seeing is volume piling in. So, all right. So that support line that we've identified is significant. It is significant. And we're holding right there. We're consolidating. And we are 7 minutes in, almost 8 minutes into our trading day. And SPY's not swinging too much. We've established a range of about 100 basis points, 150 basis points between 417.36 and 418.88. And I was wrong so far. This is not a super great swing trading day. Not so far. Until we see. I mean, how does volume compare to yesterday? I mean, volume right now doesn't even compare to when the CPI data came out. I mean, it does in terms of trading, but okay, let's zoom out. Let's get some, because it feels like the volume's really low. That's what I'm getting the sense. Not accurate. No, the volume's pretty high today. Volume's pretty high so far. That's not accurate. So it's not a lack of volume that's keeping us right there. I wouldn't trade this right now. I wouldn't trade a breakup or a breakdown right now. I'd wait for my setup. We're only 10 minutes in to the day, and sometimes when you're really zoomed in on the charts, you can forget that. You know, when you start looking at this 15-second, 5-second, 1-second chart, you know, you start seeing the volume, seeing what candles are really pumping the price. It can make you a little crazy. You don't want to do that to your trading day. You want to wait for your setup. So you can see right here, this is our level. And tried to break it down again, testing it again, trying to break it down. Keeps getting bought up. This is a bull bear battle. Battle royale for the bulls and the bears. Which direction is this going to go, right? Because there's market makers that made a market for it to go up, and they made a market for it to go down, right? So sometimes when we see the institutions duking it out like this, and they can't really make up their mind, it ends up being that somebody's going to make a little bit of a mistake and let us retail investors slide in for a sweet, sweet setup. We just got to wait for our setup, right? Now, if you're short-term trading right here, you already know that we're high up, right? So there's not any other catalyst that's going to necessarily send us much higher. So you're probably 65-35% towards the pullback, as most people are betting on. That's probably the range. And so that gives them an excellent opportunity to run this from, like 418 to 420. If they do that within the first hour or two of the day, they will sweep out and make a bunch of premiums on those derivatives plays. Volume's holding out. She's trading sideways. This is a battle of the bulls and the bears, and I wouldn't have any other seat than this one at the house to watch this, because this is this middle ground, right, where the market is trying to determine what it wants to do, which is go up. And the economy is trying to tell you we're heading nowhere but down. And the problem is the markets don't really like going down. They don't really like making money off going down. And some of them don't really have the ability to make money going down, like mutual funds and things like that. So what's happy and healthy for everybody from the market perspective is buying the dip and constant ups and quantitative easing and low interest rates. CPI is bad, whether or not this market wants to go up because it doesn't think, the CPI matters or inflation matters right now. We're in a recession. People are spending less. Inflation's high. Wage price spiral on the table. This is when wages go up. They drive prices up, but they drive prices up to the point where nobody wants to pay it, and then the company either has a choice to make: either have no employees or have no product. And that's when companies go bankrupt. And we haven't really seen that with this earnings report, right? Like, this earnings season really didn't give us enough negative. I mean, I actually thought the earnings season was pretty good overall, like, considering, I thought it was very impressive. And some of the downward guidance wasn't so great, but I want to, but I don't really think you could say that this earnings season and these reports were bad. Not at all. This is one of those things I wish Webull would fix. It's like if you switch between one chart over to 6 charts, which I like watching a lot of charts. I like having multiple charts on my face. What are you doing there? One more cue. All right. I'd like to get some screening action going on here pretty soon. I'd like to see maybe some of the small cap. Yeah, I like Webull for certain aspects I don't. I like its interface. For example, for sharing a stream with you guys, I think this is a little bit easier on the eyes, but it's glitchy still. I wouldn't say that they have nailed down all of their bugs yet. Why don't we skip Apple? Apple's going to be pretty much right in line with the SPY right now from what I've seen. I'm really wondering about Tesla because Elon Musk decided he'd sell. And so did he do 6.9 billion? Probably. No, I think it was 6.8 billion, but maybe it was 6.9 billion in Tesla yesterday. And some people are expecting him to sell a little bit more, but Tesla is up 3% right now, so there are gluttons for punishment when it comes to Tesla. It's not a stock I like to trade because I'm not into that. I'm not into what they do. So I'm always going to have a negative impression of what they should be doing. So it makes absolutely no sense for me to trade that stock. SPY has bounced off of its levels and headed back up. And this is what I was talking about, is that when we started to see support at that level that we were talking about, the 417.60, 417.60 beeps. Once it's finding support, volume is relative and moderate right there, and it bounces off that, so essentially consolidates. the market makers want this market to go up because everyone's betting it to go down, from that gap. So this is a perfect opportunity for them to bring it up by that percentage. I mean, what is it up now? It just made a move of 100 basis points in the course of 3 to 4 minutes here. This is excellent for them. They're making tons of money. Us, still got to wait for your setup here, right? Like, let's see when they get sick of this, what I call a liquidity sweep. It's basically when they roll through volume profiles that are at different price ranges where people have bought in and bought out at a specifically like larger amount. We're on a liquidity sweep right now for the bears. So the bulls have taken over this market. They're sweeping out bears, and we've identified some levels. I don't see a lot of significance in between the 418.50 range that we're at right now and the 420. Like, it's just somewhere in there. It could go and range within that and develop some new support system and resistance within that, but I think we go to like 419 and 50 or 420 even on the SPY if we break through this next level of resistance that we're on right now. And we're on it right now. We're on this biscuit. Let's see what we get. All right, I want to make sure I remember to check back in for questions. Questions, anybody? Nope, no questions. Let me know if you want me to cover any stock, anything like that specifically on the stream. I'll be happy to oblige. Can't wait to get that music rolling for us. So we have bounced off support, bounced off resistance and pulled back into this range. So, yeah, that's why you don't want to be trading that. Like, I didn't want to trade the way up on this because it wasn't going to be significant enough of a rally from where we are right now. We've already gapped up so far. There's very little like reward versus risk in the upside for a day trader or a scalper in this particular moment. Very little upside. Much more risk to the down. So what you want to be doing is waiting. And what you're going to do when you're not waiting, wait a little bit more. Check our comments. Check our stream. Microphone check. Live. Been live. It says been live for an hour and a half so far. Damn, that's good. All right. Well, I still don't know if anyone's viewing right now. I know we're in the early stages. The Block Rocket show stopping. Hoping nobody be clocking. And I guess it turns out that good news is good again. All right, we're back on the good news is good bandwagon for now. And I think I'm going to take a little break. I'm going to test everything out, check the equipment, see how the live stream went, and I'll probably join you a little bit later in the day. We're going to see how it went. So thanks a lot for joining me, all that did, and I appreciate your time. CPI 8.5 came in soft. Everything's running high. SPY looking to test that 420 mark, the infamous 420. You tell me, Elon. All right, people. Thanks for sharing. Keep Block Rocket show stopping. Peace.